Okay, what I'm going to do is I'm going to hit the highlights of this chapter because most of this chapter you've already completed before and it is a review. I'm going to go ahead and do from current slide. There we go. You should be able to see everything. Nice and gorgeous. So we are at the end of the accounting cycle, and this is basically we're going to learn how to close the books. And I'm going to go ahead and click through. You can look at these before. I'll look at the financial statements because I think there's some important things you need to learn there. And we're going to talk about, you'll see the end of period spreadsheet. I used one, we did one very similar in class. Okay, so here's a worksheet. And this worksheet here, we can take, this is my adjusted trial balance, and we can take all that information and we can create our financial statements. Now you see everything in the blue goes into the income statement. Then this little number here, 7105, it's going to come over here to the statement of stockholders' equity, and that's that ugly green color. And then, of course, all of these, nice pretty peach, is going to be our balance sheet. So that's all nice and everything, but you're thinking, okay, well, how does that get me to close the books? Well, they're just pointing out to you some of the tools we use in accounting in order to close the books. So, of course, we've talked about the unadjusted trial balance. We've talked about the adjusted trial balance. So I'm going to go ahead and we're going to, they're looking at the income statement. You can see that there. Statement of retained earnings, or statement of stockholders' equity. And, of course, the balance sheet. So what happens at the end of the year? What we do is we take all of our, and I'm going to do the current assets and whatnot at another video, so it's not so long. What we do is we take all of our nominal or temporary accounts, and they do talk about this. Here we go, permanent accounts. They're perpetual, they continue from year to year. So temporary or nominal accounts is our revenue, our expenses, and dividends. Those accounts need to be closed out. We do not carry them forward. So what we do is we close them into the statement of retained earnings. It's really easy. And so they have only 2 steps. I used to do 4 steps, but I've noticed that everybody's getting rid of the old way that we used to have to do it. And they're actually condensing the process. So it's actually kind of nice. So our first step is we close out all of our revenue and expense accounts. Remember, revenue increases on the credit. So to get rid of that credit, we're going to have to debit it. Remember, expenses increase on the debit side. So to get rid of a debit, we need to credit. Pretty cool, huh? Dividends increase on the debit side, so it'll have to be credited. So what happens, and here we go. This is what I like to see. So first thing I'm going to do is I'm going to show you that this is the balance. It's credit balance. So in order to get rid of it, what we do is we go ahead and we debit those accounts, the revenue accounts. You can see that right here. And then the next thing we're going to do is we're going to take all of these. See, everybody's on a balance side, the normal balance side of a debit. So to get rid of those debits, we're going to credit every single one of them. We total them, and they equal 9855. Okay. So I'm going to, this is the 16960 is my debit. This 9855 is my credit. I'm going to end up with net income of 7105. Huh, that was from that income statement, huh? So, you know, that's kind of a clue that you're doing everything right. Now the second step is we're going to go over here. Our balance is 4,000. It's on the debit side, perfect. We're going to credit that, and we're going to move that over to the retained earnings. So if you look at retained earnings, it had a 0 balance at the beginning of the year. We have a debit here and we have a credit. Fortunately, there's more credit. So we're going to end up with a ending balance of 3105. How do I know that's right? Because I'm going to go find that balance sheet real fast. Right there, 3105. And so basically that's it. All you have to do is go in, your revenues are listed on your credit side, so you're going to debit them, and you're going to move them to retained earnings. Your expenses are listed on the debit side, so you're going to credit them and put those balances in retained earnings. that's it. And of course, dividends. So there's the journal. So it looks beautiful, doesn't it? It's beautiful. It's wonderful. Everybody's happy. If I'm doing the journal, I would do it exactly the same way as the book did. Notice I list all my expenses, and at the very bottom, if I have, if I need to make a credit entry in there in order to balance that journal, that's what I do. So that is closing the books.